Have you ever wondered, what is it that sets mortgage interest rates and why are they so different from lender to lender? My name is David Krasinski. I've been doing loans for 20 years now in the mortgage industry. I'm here to do a quick video tutorial, kind of help you understand what happens behind the scenes, what goes on with interest rates, and show you some information that may be helpful for you if you're out there shopping for a mortgage or if you're thinking about shopping for a mortgage. So let's take a quick look here. I'm going to share my screen with you today, and we're going to look at a week of interest rates and see how those differ from day to day. What does a week of interest rates look like from our point of view, meaning from a lender point of view? Interest rates change daily. A lot of people don't understand when they're shopping around, one lender might have a different rate one day, another lender might have a different rate the next day, and so on and so forth. But interest rates change daily. Sometimes they change throughout the day. They could get better or they could get worse depending on market conditions. There's many factors that go into determining what interest rates are and what they will look like on any given day as well. So if you're a consumer and you're trying to get a better interest rate, these are some things that might help you to get a better interest rate. Having a higher credit score will definitely help you. Having more of a down payment and having a lower debt to income ratio. That means as a total amount of debt compared to your gross monthly income. Now let's take a look at a few factors here. This is going to be for conventional interest rates. This is a $500,000 purchase with 20% down and a 740 FICO score, and this is a week's worth of interest rates. So that means a loan amount of $400,000. If we look at Monday, you can kind of see here, this is what's called a par rate for a consumer. That means that the consumer is not paying any discount points to obtain this interest rate. Monday, the rate was 7.099. And if you look, this is the interest rate column right here. All of these different interest rates are available to you as a consumer on this day. You could lock in at 5%, you probably wouldn't want to do that, and I'll explain why. 5% costs you $35,268. So that wouldn't make sense if you're only planning on staying in your house for a couple of years, 2 to 3 years. The average life of a mortgage is about 4 to 8 years, so might not really make sense to pay $35,000 to drop your payment by $540 a month here. This column right here is going to show you the cost of each of these interest rates. So for example, let's look at 6%. This cost is $12,968. Now, this is the principal and interest that corresponds with the lower interest rate here. So you would go from $26.87 to $23.98. So that's a savings of roughly $289 per month. So you'd have to see if that would make sense for you. In this slide right here, this is showing Tuesday's interest rate, which was at 7.196 for the par rate. That means that rates got worse that day. How much worse? Well, it depends on the interest rate. If we go back to 6%, 6% actually is a lower cost only of $12,676, where 7% is a cost of $1,004. 7% here is a cost of $616. So you can see that those rates are worse, but the lower rates are actually a lower cost. So sometimes this doesn't correspond to making sense. That's why you want to work with a professional that can help educate you on this process. They can explain it to you in a way that makes sense to you. Let's take a look at Wednesday here, because we started out the week at 7.099. Well, on Wednesday, we had a big rate drop. So our rate now is only 6.438. So from 7.099 down to 6.438%, that's a great decrease for a consumer. Well, the next day, we're at 6.569 on a par rate. So rates got worse that day. Let's take a look at Friday and see what happened on Friday. Friday rates went down to 6.456, so a little bit better in that case. The reason that I bring this information up to you is because if you're out there shopping for a mortgage right now and you contact a lender, let's say you contact lender A on Monday, then you contact lender B on Tuesday, then you contact lender C on Wednesday, you could get a whole different spectrum of rates just because the market is changing. Now, lender C is probably going to look like they're the best because rates dropped so dramatically, but if you priced all three of those lenders on Monday, you might wind up getting a different perspective, getting a different interest rate, different fees, different things that you might not be aware of as a consumer. So the goal of this video is to help you understand that rates do change daily and sometimes dramatically, where if you're shopping, you want to kind of make sure you're shopping in that same window period of time, so that way you're not selling yourself short and winding up taking a higher mortgage where you could get a better interest rate with somebody else. So let's go back, check out FHA rates and see how those look. Okay, so FHA, the max loan amount here in this case is $441,600. That's what we're looking at. That's the maximum for Maricopa County right as of the timing of this video. That will change January 1st, 2023. We're looking at a 3.5% down payment with a 680 FICO score. So not quite as good as the conventional borrower, but you can see the rate is actually lower on Monday for a FHA borrower, 6.449, in which you would actually have a lower monthly payment for your principal and interest because of the fact that you have a better interest rate. However, with FHA, you have mortgage insurance, so you have to see what the differences are on those and have somebody calculate if it makes sense for you to go with an FHA loan or if it makes sense for you to actually go with a conventional loan. See, on Tuesday, rates went up to 6.503, so they move the same in lockstep. Conventional goes up, FHA goes up. Usually it's not where FHA is going down and conventional is going up. You can see Wednesday is a big rate drop. We're down to 5.889 for the par rate. Thursday we're at 5.952, and then Friday we're at 5.906. So once again, same trend is happening here. Rates are going up and down day to day. Now let's take a look at VA, see how those look on a $500,000 purchase price, 0 down, 680 FICO score, 6.48 on Monday, 6.5387 on Tuesday. Wednesday, great day again, 5.908. Thursday, 5.971, and Friday, 5.925. Now, here's all my contact information. If you want to reach out to me, if you want to go through anything specific, I'm happy to do that with you. Mortgages are very complicated. There's not just one easy solution, so the intention of this video is not necessarily to quote rates to you as a consumer, but it's really to educate you on how they could change from day to day, so that way you're arming yourself, you're understanding what happens with the market or what could happen with the market, and you're working with a professional that can help you understand what is best for you. Now, if you have any questions, reach out to me. I'm happy to help you. Thank you so much for watching and have a great day.